All right, you guys, let's go ahead and get started here. I'm excited to be speaking with you today. Let me know, this is designed to be interactive. And for this presentation, you're going to need a pen and paper. We're going to get into some things. I know a lot of the people that we work with would like to be using Excel better to track the results. And so we're going to be getting into that today and helping you better understand a little bit about how to use Excel to track results and how that can benefit you. So let's go ahead and get started. Today, I'm going to share with you 3 secrets that I don't care what you're doing. I don't care if you trade Forex. I don't care if you invest in real estate. I don't care if you trade options, stocks, commodities, ETFs. It really doesn't matter. At the end of the day, there are innumerable investment vehicles for your money. And for me as an investor and as a hedge fund manager, there's 3 things that I think that you've got to carry over into any kind of investing that you do. And so today, that's kind of what I want to focus on is the 3 things that I found that investment bankers and professionals are doing that are completely different from the things that retailers are doing. And so I'm going to share with those, and you're going to need to get out a pen and paper, and you'll probably be taking some notes. So just so you know, nothing that we're talking about today is a recommendation to buy or sell security. You've got to make decisions based on your own individual goals and objectives. With that said, folks, let me just introduce you briefly to who I am. My name is Nic Lovelace, like Love Your Shoelace, or Linda Lovelace, or Lovelace on Happy Feet. That is my real last name, believe it or not. This is myself and my wife. We've got 5 kids. Our 5th is not pictured here, but we do have 5 kids. I love to fish. We go deep sea fishing in Hawaii and off in South Carolina. We go there every year as well. I love to ski. I live out here in Salt Lake, and there's just wonderful powder out here. And I love to fly. I've got my pilot's license. I started flying when I was 14 years old, and I got my license when I was 17. And I think trading is a lot like flying. Professionally, I started a hedge fund. It's an index options-based hedge fund called Ren Capital Management. Started that back in 2010. And I'm also the founder and head trader of the Super Trader, who we specifically help people, really just, we use options primarily, but to the principles that we teach and the things that we do kind of flow over into every part of investing. So 3 things, folks. Again, you're gonna need a pen and paper. This is designed to be interactive, so if you've got questions, feel free to ask away. But the first thing that will instantly make you a more successful trader, and this may seem maybe a little bit obvious, but the first thing is creating a trading plan. The second thing is following that trading plan, and the third thing is having a co-pilot. So creating a trading plan, secret number 1. This is such a arbitrary thing I've found in teaching people, and a lot of times I'll ask, what does a successful trading plan look like? One of the things I do is invest in small business. We've got a little venture capital firm. We invest in small business, and a couple of years ago we had a business called Life Elevated Rentals. They basically rent recreational vehicles, boats, ATVs, snowmobiles, things like that, RVs. And they came to our group and they pitched us, kind of like a Shark Tank type deal, and they pitched us for investment capital into their business. And this was their business plan. It was probably 30-ish pages long, and it included everything you could imagine to give us investors a reasonable expectation that we were going to be able to get a return on our money and that we weren't going to lose our money, right? So should your trading plan look like this? Should your trading plan look like this? Answer me in the chat, yes or no. What do you think? Let me know if your trading plan should look like this. You guys know where the chat is? Let me know in the chat. No, it shouldn't, right? I mean, this is crazy. way too much information. You don't need to have a trading plan that looks like that. So what should be included in your trading plan? Any ideas? What are some things that you think should be included in your trading plan? Go and type those into the chat. What are some things that you think should be included in your trading plan? I don't know if everybody knows where the chat is, but this is designed to be interactive, folks. Go ahead and interact with me. Let me know that you're alive. What are some things that you think should be included in your trading plan? Chris says, how are you going to trade? What else, folks? What else? What's included in your trading plan? Steve says goals. All right, guys, come on, wake up with me. What else? We've got quite the crowd here. Let me know that you're live. Ellen says initial investment, time element, retirement, education. Perfect. Okay, who else? Betty says current capital. All right, Mark says trading strategies. Chris, how to get in, out, risk, reward. Matt Saliso, time I have per day, how much money I will use, how much money I want to make. Steve, method, strategy. Milo, what entry, stop, profit. Mark, allocation. Betty, track your weekly return. Roland, profit loss targets. So with all of this, Bill says capital management. With all of this, do you think we could probably come up with a 30-page document? And we've got a lot that's been put in here, right? With all of this, we could probably come up with a 30-page document, right? Bob says trade limit. When we've got a lot going on here. Really what it comes down to is three things, folks. Three things. And I think that a lot of what you've said will be incorporated by these three things. All right. But as an investment banker, managing a hedge fund, if you're not doing these three things, if you're not measuring these three things, if you don't know these three things right off the top of your head, then I don't know that I would be trading. I would be afraid of you if I were your money. Okay, so if you don't get anything out of this, I want you to know these three things, and I want you to go back. I want you to figure this stuff out immediately. Okay. All right. Durham says no. Looking for an investor for. Oh, he's looking for an investor. Absolutely, Durham. Shoot us an email. Alan says newbies need education. They sure do. So what should be included in your trading plan? There's three things. Okay. The first one is your win rate. You need to know what your target win rate should be for your investing system. And then you need to track that and measure it. We've built a tool here that I'm going to give you today. We generally sell it for $500. I'm going to give you this tool today that will allow you to visualize if you just maintain a certain win rate, what effect that will have on your long-term results. I'll introduce that to you here in a moment. So first of all, what is win rate? Win rate is a percentage of profitable trades your system should target. And this seems a little bit basic, folks, and it's going to be basic for some people, but I bet you if I asked, I think there's over 100 people here today, who in here knows what your win rate is? Somebody tell me, what is your win rate? And those that don't know it, be honest. Tell me, nope, don't know it. Just be honest with me. Does anybody in here today know what their win rate is? If you don't, say, nope, I don't. Huge props to those that are honest. Scott says profitable trades out of trades taken. Yep. Scott, he knows his. He says 70%. Steve says 78%. Roland, 30%. Bob, don't know. Huge props to you, Bob, for saying don't know. Bob, most people don't know. All right. Betty, no, she doesn't. Steve has a 78% win rate. So let's go ahead, and I'm just going to use our results, and I'm going to introduce you how to calculate this win rate, okay? So what I'm going to do is I'm just going to come over here to Norman. Nice job. 83%. Anderson, 65%. Okay, sweet. You guys, there's more people in here that know their win rate than I actually guessed would. Bob, no idea, been trading greater than 10 years. Bob, I would say that that is probably the norm. You're not alone, but that's why we're here. That's what we're going to change here tonight or today. All right, so I'm going to use just kind of our, we have 3 systems that we've developed. We call them monthly income, capital growth, and explosive profits. And I'm just going to use our results here, and we're just going to go back to the beginning of June, and we're going to calculate our win rate, okay? And I'm going to show you how to do this in Excel. It's really pretty simple. Let me just copy these results here, and we're just going to, again, go down to our June results here. Let me just copy these. And then what we're going to do is we're going to pull up an Excel spreadsheet, okay? All right, and let me just pull up an Excel spreadsheet here, and I'm just going to paste these in, all right? So again, what we said here, so the ticker symbol, the strategy, we opened the trade in column C, we closed the trade in column D. These were our strike prices, but what we're looking at is column H. Okay, and what we're going to want to do here, we're going to want to calculate again what our win rate is from this stuff. And so I'm going to give you some formulas. You can write these down. You can always look at this recording later. But this is something that, again, if I were you and you didn't know this stuff, like literally know it down to, and you're not keeping track of this, then I'd be really afraid of your money. If I were your money, I'd be afraid. Okay, I'd be really afraid. So calculating our win rate. Let's go ahead and do that right now. So win rate. Let's just, again, this is, we're going to kind of do this in real time here, folks. So it may not be sexy, but it'll work really good. Bob says audio is breaking up. Can you guys hear me okay? Can you guys hear me okay? I think somebody's on the background as well. I think somebody's unmuted, by the way, Reed. Okay, so here's how we're going to do this. Can you guys let me know if you can hear me? Audio. Okay, good deal. All right, perfect. Somebody's unmuted right now. I don't know who it is, but we'll just forget about it. So what we want to do is we want to figure out. So here we have several trades, right? I don't know how many are here, but we've got several. And what we want to do, you've got some red ones, you've got some green ones. We want to figure out what our win rate is. Okay, so we're going to go over here. We're going to say, so first of all, we need to figure out how many we've got. Okay, so we're going to go equal count. Okay, so equal count, equal sign count. So equal sign, open parentheses, count, close parentheses. Okay, so equal count. So that is the formula. I just put that into the chat area. I don't know if you guys can see that or not, but equal sign count, and then we're going to do open parentheses, and we're going to select our very top one in column H, and we're going to hold down the shift button and go down to the very bottom one, and we're going to close parentheses. Okay, so you see my formula up there in the formula box, and I'm going to hit enter, and it's just going to count how many trades we have. Okay, so total trades, total winners, total losers. Okay, so we know how many trades total we have. Now we want to figure out how many winners we have. So I'm going to go equal sign count if, open parentheses, and now I'm counting if this is a winner. Okay, again, you're probably going to need to go back over this, but the formula for that is going to be right there. Okay, I just put it in the chat, and it's up here in the formulas column. All right, so let me hit enter there. So now it's saying that I've got 15 total winners. Okay, 15 total winners. And for losers, you know, it's pretty simple. You could just do your total trades minus your total winners, and that would give you your number. But I'm going to also use the count if formula here, and we're going to figure out how many were less than 0. And so we had 8 losers. So what's my win rate? The way that we figure out our win rate is we take our total winners divided by the total number of trades. So I'm going to go equal sign, open parentheses, total winners divided by total trades. So 15 divided by 23, and that's going to give me a win rate here of 65%. 65% is our win rate with this data. Okay, so is that good or bad? Is that good or bad? we really have no idea. There's more information that's needed. So when somebody tells me in here that they've got an 83% win rate or a 70% win rate, or even Roland, I really appreciate his honesty. He says he has a 30% win rate. Look, the Turtles, who were some of the most profitable traders that we know of, had like a 30% win rate. Okay, so we really have no idea. Reed, is that you? I don't read. I think you're unmuted, my friend. Somebody's unmuted. There's somebody in the background unmuted. So if you can mute them, that'd be great. So Scott says it depends on expectancy. Okay, so really expectancy and what I think Scott is saying here. So expectancy is exactly right. Expectancy is otherwise known as your reward to risk ratio. Okay, and that is something you also have to know. So win rate, that's our win rate. That's how you calculate that win rate. All right. You've got to know that, folks. If you don't know that number, you need to figure it out and figure it out within the next week. That's your job next week. All right. So for this example, we figured out that our win rate was, what do we say? 65.22%. We'll just say 65%. All right. So we're going to say 65%. Okay. Second thing that you need to figure out, and that should be included in your trading plan, is you need to have a target reward to risk ratio, or otherwise known as expectancy. Okay. So let's go ahead and I'll show you how to figure that out as well. So your reward to risk ratio is basically just a ratio showing you the average profit to the average loss of your trading. All right. And so your trading plan should include a target expectancy or a target reward to risk ratio. All right. Nice, Norman. So how many of you know what your reward to risk ratio is? Norman does. He says 3 to 1. That's phenomenal, Norman. 83% win rate and a 3 to 1 reward to risk ratio. I probably wouldn't be sitting in webinars if I were you, my friend. I'd probably be out enjoying my beach house or something like that. That's quite phenomenal. So how many of you know your reward to risk ratio? Tell me. If you do, tell me. If you don't, tell me I don't know it. Scott Allen, 1.83. Sweet. Awesome, my friend. How many of you know your reward to risk ratio? If you don't, if I were your money, I'd be extremely afraid of you. All right. So let's figure out what our reward to risk ratio is using these numbers from our past month. So reward / risk ratio is the next thing that we're going to figure out. Don't know. Walter, Allen, don't know. Bill, don't know. Nope. Durham. Okay. Most people don't. You know, and you're not alone, and that's okay. But from now on, you're going to know it, right? From now on, you're going to know it. All right, so I agree, Norman. Good for you, brother. So reward to risk ratio. The way that we figure that out is, again, going back over here to this calculation, we basically take our average profit and we divide that by our average loss. So we need to figure out what our average profit is, and then we need to figure out what our average loss is, and then we'll put it all together. So let's come back over here, Excel. And so we want to figure out what our average profit is. We want to figure out what our average loss is. So we'll do that in those two columns there. So for our average profit, we're just going to go equal sign, open parenthesis, equal sign, average if. So we're basically saying if this is a positive number, take it and average it out. Okay, so average if my range is right here, I'm going to hold shift all the way down to right there. So it's going to select all that. So average if, comma, parentheses greater than 0. Okay, so again, you can watch this over again and see these parentheses if absolutely, Bill, and we've got a kind of a pre-built one for you as well, so you can reach out to us, we can give that to you. So when I hit enter, that's going to give me my average profit. So my average profit is 56 cents per contract. We see a winner here of 65, 60, 55, 27, 55, $1.08, 10, 40, 10, 70, okay. Yeah, and you see the percentage returns here, but we want to know what the average profit is. So here we've got an average profit of 56 cents. And somebody's in the background there. Sorry about that, you guys. I'm not quite sure who's unmuted, but it is what it is. All right, so that's our average profit. Let's figure out what our average loss is. Again, we're going to equal sign average if, and the data that we're taking it from is right there. Perfect. And we're going to go comma less than 0. Okay. And I'm going to hit enter. Oh, oh, there we go. I see the mistake here. I did not put a parentheses right there. There we go. So our average loss is 30 cents. Okay. So let's just go ahead and we'll round that up to 31. So that is going to be our average loss. So again, the way that we figure out our reward to risk ratio, going back to this, is we take our average profit. We take our average profit divided by our average loss. All right. So let's go ahead and we're going to do that right now. And the way we're going to do that is we're just going to come in here. We're going to go equal sign, parentheses. We're going to go 0.56 divided by 0.31. Okay, so here we've got a 1.80 reward to risk ratio. Okay, yeah, we could go to absolute value. We could just go over here equal ABS and click on that. It'll give us the absolute value there as well. For this purpose, we'll just round our loss up, and so there we go. All right, so here we've got a 1.81 reward to risk ratio and a 65% win rate. Anybody know if this is good or not? Anybody know if this is good or not? Any ideas? Let me put it this way. Okay, basically, if I had a, you guys, I'm sure in the past you've been to the Nickelcade, right? Okay, if you went to a Nickelcade, and let's just say you had $100. You had $100, and for every $1 you stuck into this machine, 65% of the time it was going to turn into $1.81. 65% of the time it's going to turn into $1.81. Okay, 35% of the time, your $1 would be lost. How long would you stay at the Nickelcade if you had a machine like that? Scott says you'd go every minute of every day. Absolutely, that's what this is, folks. Okay, you know, and now all of a sudden, are you emotional? I mean, how many of you get upset when you have a bad trade? How many of you have a bad weekend if you have a bad week in trading? How many of you get excited and have a great weekend when you have a great week of trading? How many of you get excited and have a great day if you had a great day of trading? You walk onto the floor of the exchange, you have no idea if a market maker's up $1 million or down $1 million. You have no idea. They've eliminated their emotions because they've gamified it. They've systemized it. How many of you have walked into a bank? How many of you have seen the banker, the loan into the person over loans? How many of you have ever seen them upset or excited because a loan went through or a loan defaulted? You have no idea. They've gamified, they've systematized their investing. And that's what knowing these metrics will do. You've got to get to a point in your investing, my friends, where you've gamified it. You've systematized it. And you can see past the day-to-day, month-to-month ups and downs. Look, if this were just a game, you'd stand at this Nickelcade all day long, every day, just like Scott said. He said you'd go every minute of every day. If for every $1 you stuck in, $1.81 got stuck out, 65% of the time. You would accept the fact that 35% of the time you're just going to lose your buck. I don't care, right? I don't care. But it gets better than that. What's so cool is we've developed a tool that allows you to visualize these things. Okay? It allows you to visualize. This is what we call a Monte Carlo simulator. It basically takes your inputs over here and spits them out so you can visualize the long-term effects if you just maintain these metrics. Yes, Richard, it is being recorded, and I know that Reed and the group, the guys will send it out to you later on, but it is being recorded. So what's so cool about this is that you can stick in your win rate right here. So let's say, again, we had a 65% win rate. We had a 65% win rate. And let's just say I'm starting with a $10,000 account. All right. And we said that our reward to risk ratio was 1.81. 1.81. So let's go ahead and plug that in to this 1.81. Oh, 1.81, not 1.89. Okay. The last metric, the very last thing that you should be measuring. So again, we know that our win rate here for these purposes were 65%. Our reward to risk ratio is 1.81. The last thing that you've got to define is your position sizing. Anybody that tells you don't risk more than what you're willing to lose, that is a bad statement, right? I mean, how many of you believe that a bank says, I'm not risking more than I'm willing to lose on this home mortgage, or I'm not risking more than what I'm willing to lose on this line of credit? That's not how real investing works. You have to know how much you can risk on any given investment. You have to know that. Position sizing is critical. It doesn't come down to I'm playing around, I'm tinkering around, I'm only risking what I'm willing to lose. Folks, you've got to define this number. You can't continue to follow the talking heads on Wall Street and those that are lifetime educators. You've got to define this number. Position sizing defines what percentage of our account should be at risk per trade at one time, and how do we decide and change this? If you're underestimating the position sizing, you could be ending up with 10 times less than what your account could have amounted to. Overestimate, and you risk blowing up your account. This is, I would say, only a small minority of traders understand this simple concept. Most of them say, I'm only risking 3 to 5%. I'm only risking what I'm willing to lose. You've got to define this number and recognize its effect. Okay, again, somebody said that I would stay here all day long at this nickelcade if I had these results, right? Every $1 I stuck into this machine spit out $1.81 65% of the time, and only 35% of the time did it eat my dollar. I'd stay there all day long. Well, what happens if, again, I have a $100 purse? I walk into this nickelcade. What would happen if I stuck $50 in? What would be the reward potentially? And what could be the loss? Do you think it would make sense to go in and stick half of my capital into this machine? Do you think it would make sense to do that? Norman says he trades mostly Forex with no more than 2% of total equity. Stocks at risk, no more than 5%. So do you think it'd be smart to go stick half of our purse into this nickelcade machine? If we stuck $50 of our 100, we know we're 65% right. We know that for every $1 we put in, we have the chance of making $1.81. So if you stuck in $50 here, if you stuck in $50, then you have the chance of turning it into 90. Okay? The chance of turning into 90. Give me 1 second. Excuse me, I had to cough. I've got a pretty bad cold. So we have the chance of turning our 50 into 90, right? But we only have $100. If this happens to be the 35% of the time that I'm wrong, now half of my money is gone, even though I'm only wrong 35% of the time. Okay? So no, it would not be smart for me to go and stick half of my money in there. So what would be the right number? You've got to play with that yourself and figure this out. This analytics tool will help you visualize that. I mean, let's say again, we had a $10,000 account and we risk 5% per trade. Look at this, folks. I mean, the numbers get so silly, right? Who was it said that the ninth one of the world, or the eighth one of the world is compound interest? Folks, you don't have to make 100% returns a month. You don't need to do that. You just need to catch the vision of compound interest. Recognize that, look, you're going to have pullbacks, but as you're able to visualize and see past that and constantly check yourself, say, okay, am I on track to have my 65% win rate? Is my reward to risk ratio where it needs to be? If it's not, what things can I do to course correct and get back on course? As a pilot, folks, I can take off from LA and land on a dime at Hong Kong International. The way that we do that is we're constantly course correcting. If you're not measuring these three metrics, your win rate, your reward to risk ratio, your risk per trade, then I would be very, very, very afraid. Most of you have bad weeks when you have bad trading and good weeks when you have good trading because you don't know what the future holds for you. You've heard the saying, past results don't equal future results. Folks, I'm here to tell you that they do. If you track these things and you constantly course correct, that's what gets you to success. That's why your banker's not emotional, because they have these systems in place. They know what their win rate is every time they issue a loan. So every time they issue a loan to a Ford F-150, if they do 10 of them, they know that 4 of them aren't going to work out. They know that what their average profit is to their average loss. They know how much they're risking per investment. If you don't know these things, folks, then I'm afraid that you'll probably never find long-term success. You've got to take this serious and quit just messing around. If you want to be successful, these are the things you've got to start tracking. I don't care what you trade. I don't care if you trade options, if you invest in real estate, if you trade Forex. All of it can and does work. You'll have people say, low here and low there. Come over here. Forex is the way. You'll have people say that options are the way. You'll have people say that penny stocks are the way. You got to wake up and recognize that most people are trying to sell you something. And if they can answer these 3 questions, win rate, risk to reward, risk per trade, and they can tell you what those numbers are, and you can visualize, hey man, if I just follow this person, he's got a 65% win rate or a 1.81 reward to risk ratio, and they're risking 3 to 5% per trade. I know if I just stick to that, I can look past the bad, even if I had 4 losing trades in a row, even if I'm down peak to trough 18%, I can look past it and see that over the long run, if I just stick to it, I'm going to be successful. Most people don't stick with anything for longer than 9 to 12 months. Unbelievable to me. You're never going to have success, folks, if you keep on hopping around. You've got to find something that gives you metrics that will lead to long-term success. Now, somebody said they're 30% right. If I was 30% right here, am I going to be successful? No, I'm not. I've got to make some changes. So I either need to get better at technical analysis and knowing when to get in and when to get out to raise that win rate, or I need to let my winners run and keep my losers smaller to have a higher reward to risk ratio. I need to have like a 5-to-1 reward to risk ratio or a 6-to-1 reward to risk ratio. All right? So you can tinker with that, and that's something that I don't know. This industry frustrates me so much because there's so much potential for you to be successful if you'll just recognize what you need to be doing and quit buying into the junk that sold you. Recognize that it doesn't matter what you do. If you follow somebody, great. I think that that's a wise thing to do. I said that 3 things. Remember, I said that there are 3 things that you need to do to be a successful trader. Okay, the third one was having a co-pilot. I believe that you need to have somebody that you're accountable to that's as good or better than you. I do believe that. Okay, whether that's a spouse or whether that is Matt Buckley or Nic Lovelace or Jim Cramer, I don't care. But they need to be measuring their win rate, their reward to risk ratio, and their risk per trade so that you can too. Creating this trading plan using these 3 metrics that I've just introduced to you is the easiest way that I know of to generate consistent income and growth. I just don't know of a better way to do it. So I'm almost out of time. I think we've got 7 minutes before the next presenter. What questions can I answer for you folks? You can download this tool here at that link. I'll put that link here in the chat. Again, we're giving that away for free. You can go download that for free. That's something that we normally sell for $497. It's also included in our membership, but right now you go download that for free. So I don't know if you can see that there in the chat. Did everybody get that in the chat? Reed, can you help me out here, my friend? If I'm not putting it where I should. Actually, let me see here. There we go. I think I put it in the chat area there, folks. Can you guys see the link in the chat? All right, what questions can I answer for you? Durham says, excellent example, appreciate it. What questions can I answer for you? Did anybody get anything out of this? Tell us one thing that you got out of this today. One thing. Tell me in the chat. One thing you got out of this. You can go download the tool later, okay? Come back to me. Walter says, yes, he did. Walter, what did you get out of it? One epiphany that you got. Again, we've got 6 minutes here, I think, before the next presenter. You can go download the tool later. Tell me, what is one thing that you got out of this? One epiphany, share with the group. Betty says, thank you, a whole 3 plans. Awesome. They're a great understanding of what I have been doing wrong. Sweet, my friend. Steve, great math lesson. Bill, build a trade plan. Ellen, being accountable. I love it, you guys. Come on, you guys. There's over 100 people in here. Let me know one thing that you got out of this. If you're going to come here today and you're going to sit in, I'm going to take my time and you're going to take your time. What's one thing that you got out of this? Tell us in the chat. Being accountable. No link in the chat. It says 404 not found. So I just put it in the chat and that's working. I'll put it in the chat again. So it should be there. It should be there, Richard. Bob says keep records. Walter, which is more important to measure, option or total profit? It doesn't matter. It really doesn't matter. I think you just need to, so it could be either the, so for this example here, I broke it down into the reward per contract, right? And that's how I measured it. I keep my risk consistent. So most people probably don't do that. You probably need to times that out. So maybe you had $650 of profits and $300 of profits. So that's probably what most people would need to do there, my friend. E. Anderson says, a way to track my progress. Mark says, thanks for just laying it out so clearly. Love it, brother. Rock on. Scott says, buy a beach house. Absolutely, go do that now. That is, if you didn't get anything away, go buy your beach house. Love it. Bob says, be consistent. Norman says, I know what I am doing is correct. Nice, Norman. Good work, brother. Keep it up. Walter said, now just help somebody else, okay? Go and help somebody else to figure it out. There's too much noise in this industry. Walter says, measure reward to risk ratio. Betty says, how to go about finding a mentor. Betty, you can contact us. Our contact information is on the site. We're more than happy to talk to you about that. Steve says, I learned what expectancy is. Thanks. Absolutely, Steve. Ellen says, I'm grateful that you were being here since I just started trading. Ellen, be patient with yourself, okay? Recognize that there's a lot of people out there that want to sell you something. And you need to be selfish, okay? Ike says, thank you so much. Betty says, many people sell stuff, but I need a mentor, but not sure how to find. Betty, like I said, I'm happy to help you. I know everybody here, most of them, I know most of them, and most of them are really great people. So, and have good stuff. Again, but if you follow somebody else, you need to track these metrics and make sure that you are tracking metrics that will lead to long-term success, and use that analytics tool I just gave you for long-term success. So you're going to have a lot of people that were willing to teach you, and they're all nice and great and good. So am I. But you need to be tracking these metrics. And if you're not doing that, then you're probably never going to be successful. Mark says, so if I multiply win rate by reward to risk ratio is more than 1, I am winning. For example, yours 65% by 1.81 equals 1.17. Yeah, I guess you could do that. Yep. Betty says thanks. All right, guys. I've got 2 minutes left. Any other questions here that you guys have? Either way, other than that, folks, I'm going to be the guy that gives you a bathroom break and allows you to get up and go get some water here before the next presentation. So it's been a pleasure to be with you folks. Bill says, what do you trade? Stocks, options, futures, and preference? I personally trade options. We do trade some stocks. At the Super Trader, we focus on options and stocks. I personally trade some futures. I invest in real estate. But at the Super Trader, it's primarily stocks and options. And our website is thesupertrader.com, thesupertrader.com. Again, I'll put that also in the chat. And if you want to find out about us, great. If you want to find out about anybody else, great. I don't care. What I care about is you track these 3 metrics. My pleasure, Mark. Rebecca says, is that 65% your win rate, and what is the main way you achieve it? It is our win rate, and we primarily just swing trade options.